Hello everyone, welcome back to my channel. And first of all, let me thank you, those who make comments to my videos. It really boosts me to create another ones. So your feedbacks are really important for such young YouTubers like me. By young, I mean not the age, but the time being on YouTube. And today I want to talk about what happened last week, what's important is this week, and also share my personal view on the whole AI and data center situation. First of all, last week was interesting because the US federal government shutdown finally ended. And this actually had bigger consequences than people think. For a while, a lot of important economic data simply was not available. No unemployment numbers, no inflation numbers. And when the data is missing, both the market and the Fed gets nervous. And just a week earlier, most analysts expected 0.25% rate cut in December. But after the shutdown and the missing data, sentiment just flipped. Now the majority is leaning toward no rate cut in December, and that change really shook the market. Risk sentiment moved into risk off, and we saw wave of selling across different sectors. Another big topic last week was the negative sentiment around companies connected to AI data center infrastructure. It started with the earning report of the company called CoreWeave, which reported some delays in their construction and execution timelines. And that immediately dragged down other companies in this segment like Iron, like Nebius, and many names tied to data center infrastructure, and also some quantum computing names as well. At the same time, the so-called AI bubble narrative increased again, and a lot of it was connected to the company called OpenAI, the creator of ChatGPT. Many people referenced OpenAI because in one of the recent interviews, the CEO of the company, Sam Altman, could not clearly explain where their future revenue will come from, considering the enormous spending they are planning. They signed massive supply and infrastructure agreements with almost every major player in the industry. There were agreements made with NVIDIA for GPU partnership worth $100 billion, then with AMD $100 billion alternative chip strategy, then Amazon Web Services $38 billion cloud expansion, then Intel for the CPU foundation, then Taiwan Semiconductor, also the fabrication partnership. Also, it was Microsoft, it was Broadcom, and other names. And now the investors are asking the obvious question: with all these commitments, where exactly will the revenue come from to justify these expenses? And there was no clear answer from Sam Altman. And that uncertainty is what fuels the AI bubble narrative. Now, I want to share my personal perspective. Last week, the company I follow closely, and I've mentioned it several times in my previous video, Advanced Micro Devices, held their financial analyst day. It's a very rare event. I listened to the entire webcast, and honestly, my opinion didn't change at all. I still don't see an AI bubble. I see a massive global opportunity. And here is the key point. These numbers come directly from the CEO of the company, Lisa Su, someone who has been leading AMD for years, who understands both the business and the technology on the deepest level. She's inside the trend, she sees the demand clearly, and she carries full responsibility for every statement she made publicly in front of investors, analysts, and the entire market. And she would not risk her reputation lightly. So, according to AMD, the data center total addressable market will exceed $1 trillion by 2030. For you to compare, by 2025, basically a few months more, it should already be around 200 billion, meaning around 5 times growth within 4 years. Then, data center AI revenue is expected to grow at more than 80% of compounded annual growth rate within the next 3 to 5 years. Then, the total data center business compounded annual growth rate is expected over 60%. Server revenue share about more than 50%. So these are not numbers from the enthusiastic analyst or some bank report. These are numbers presented by the CEO of one of the strongest semiconductor companies today, supported by an excellent financial quarter that they presented earlier. So for me, the data center AI trend is definitely real. It's global and just getting started. It's basically started, I would say, in US, because yesterday I read the news that European market, for example, is still kind of slow. So I'm sure it's gonna accelerate in this area as well. Now let's look at this week, because it's also extremely important. The biggest event is the NVIDIA earnings report. NVIDIA is currently the largest public company with a market capitalization around $4.6 trillion. And their earnings will basically decide the mood of the entire AI sector and market in general, because it's the biggest company. Everyone wants to know, is the demand for chips still super strong? Or are we finally seeing a slowdown? This one report will set the tone during this week. Other important earnings this week is going to be from the Home Depot. It's a great indicator of consumer spending on the housing economy. Then Palo Alto Networks. It's a cybersecurity company which is becoming more critical with AI adoption. Also, Walmart, probably the best signal for the US consumer strength. And finally, some macro data returns. Because the shutdown is over, we finally get fresh numbers again for the initial jobless claims, unemployment rate, S&P, global manufacturing, PMI, etc. So this week should bring back real data, not just some speculation. Now that almost all major companies have already reported, we enter a very interesting market phase. Because at this moment, we already know the latest earnings, the updated forecasts from the companies, and the real business actual performance. And from now until the next earnings season, which is going to happen at early stage of 2026, the stock prices usually move mostly because of news flow and market sentiment, not because of actual financial results. And this is exactly where opportunities appear if you have been following the earnings reports. If the fundamentals of a company you follow are strong and the stock drops because of some noise, some news, I think this is the great moment to enter to the position of this company. If the sentiment gets too positive and the stock becomes overbought, that's a good moment to maybe make some profits, take profits. This so-called quiet period between earnings can be very favorable for the investors who understand the business and watch price swings closely. So we have the facts. Now it's about reading the sentiment, staying patient and using the noise to our advantage. That's it for today. Thanks for watching this video. I appreciate every like and the comment. So please don't be shy. See you in the next